Well, hi class. Welcome back to part 2 of chapter 5. We're going to finish our worksheet here. And in the meantime, I have totaled up my debit and credit columns for the adjusted trial balance, and they match. So I'm ready to move on to the next part of the worksheet. And basically what I'm going to do is copy the numbers from my adjusted trial balance section into either my income statement section or my balance sheet section. And from the cash account down to the drawing account, cash to drawing, those are balance sheet accounts, assets, liabilities, and owner's equity. We're going to copy those numbers all the way over here to the balance sheet section, and then our revenues and expenses from the fees, income, and all the expense accounts, we're going to copy them right next door to the income statement section. So I'm going to just be quiet here for a second and type these in real quick. Okay, those are my balance sheet accounts. That shows my assets, my liabilities, and my owner's capital account, and then of course the contra owner's equity account, which is the drawing account. Next, I'm going to type in or copy over the numbers for the income statement, which is going to be my revenues and expenses. And then I'm going to total each one of those 4 columns up. And usually in accounting things balance, but when you total each of these columns, none of them are going to have the same number. So I've already kind of calculated those, and I'm going to fill those in. The income statement debit column totals $21,630. The credit column, of course, is $47,600. The balance sheet debit column is $101,700, and the credit column is $75,730. Okay, now I have 4 different subtotals here. What I'm going to do is, just for the income statement section, I'm going to take the 2 subtotals and subtract them from each other. So $47,600 minus the $21,630, and the difference, the number I come up with, I'm going to put under the smaller side. And because 21,000 is less than 47, I'm going to put it under the 21,630. So when I subtract those 2 numbers, I get $25,970. Now I'm going to do the same thing with the 2 balance sheet subtotals. I'm going to take 101,700 minus the 75,730, and the difference I'm going to put under the smaller side. Again, 75,000 is less than 101, so it's going to go under the smaller side. When I subtract those 2 numbers, I get 25,970. And you'll probably recognize that number from right here. These 2 numbers have to match. And when they're on the outside 2 columns of these 4 columns, that means I have a net income of 25,970. If my smaller side would have been the 2 inside columns, then I would have shown a net loss in my business. So the last thing to do to finish this up is just bring down my totals. The 21,630 plus the 25,970 gives me 47,600. I bring this down because there's nothing to add to it. I bring this down. And when I add 75,730 to 25,970, I get 101,700. So these 2 numbers need to match, and these 2 numbers need to match. The 25,970 reflects my net income, and over here on the far left, I'm going to write in net income, or if it were the other way, I'd put a net loss if the 2 inside columns were the smaller side. So that's how you finish up the worksheet. Now the whole point of the worksheet is to come up with some really accurate numbers over here. These numbers that we have in our income statement section and our balance sheet section is what we're going to use when we fill out our financial statements. So that's our next step in the accounting cycle, fill out or to create the financial statements. So I'm going to just scroll down here a bit. There's a form here for the income statement. Fees income, I'm getting this number right here from my worksheet, $47,600. I'm going to put it right here. salaries expense was $9,700. Utilities expense, I don't know why these aren't in the same exact order as on the worksheet, but that's all right. $1,400 for utilities expense. Supplies expense was $6,650. Advertising expense was $2,100. Rent expense was $1,600. Yeah. And depreciation expense was $180. So those are the expenses, and again, I get them right from my worksheet in the income statement columns. I total up my expenses, and when I total those up, I get $21,630 in expenses. Put that right there. And then I just subtract my net income, or my revenue account, my fees income, minus my expenses, and I get $25,970. Now what you'll see is that number should match up here on the worksheet with the net income amount that I got on my worksheet. So I'm good. And I'm ready for my next statement. I'm going to scroll this up a bit. And the statement of owner's equity always starts with the owner's capital account at the beginning of the month. And on the worksheet, everywhere it says that the owner's capital account is $60,000. So I'll put that in there. There's only two things that affect the owner's equity, for our purposes anyway, whether the customer had a net income or a net loss, and whether the owner put any money in the business or took any money out of the business. And so for our statement of owner's equity, we've got net income for January. We're going to get that from our income statement, which we just completed. So $25,970 in net income, less withdrawals. And I can go up and look and see how much I had in the drawing account on my worksheet. And I had $7,000 that the owner took out of the business on the worksheet. So I'm going to come down here, put in $7,000. Okay. Now, the net income less the withdrawals, when I subtract those two, I get $18,970, which was a net increase in the owner's capital account. And then because it's an increase in capital, I add it to the owner's beginning balance. $60,000 plus $18,970 gives me $78,970, which is what the owner is now worth at the end of the month. So that's my statement of owner's equity. My third financial statement that I'll prepare is called the balance sheet. And I'm going to scroll down a little bit so it comes up. And I'm getting these numbers right from the balance sheet column of my worksheet. Cash had $35,500. Accounts receivable had $12,600. Supplies had $1,100. Prepaid advertising $6,300. Prepaid rent $17,600. Equipment. Now what they do on equipment is show the book value. So, so in the first column here I'm going to put the equipment account had $21,600, which was the amount we paid for the equipment, less the $180 depreciation. Whoops. Sorry about that. And I'm just going to take the $21,600 minus the $180 and put the book value, or what the equipment is worth, in the right column there. And that would be $21,420. Okay? So when I add up all my assets right here, subtract out my accumulated depreciation, it totals $94,520. All right. Next, I'm going to do the liabilities and owner's equity section, and I just have one liability account called accounts payable. So when I look up to see what the balance is, it's $15,550. Okay, for the Sadie Palmer capital account, we're going to get our number from the statement of owner's equity that we just prepared. So if you look at the statement of owner's equity, the capital account at the end of the month is $78,970. So that's the number we're going to use there. $78,970. And then when I add my liabilities plus my owner's capital account, I come up with a grand total of $94,520, which has to match my total assets. So the fundamental accounting equation is in balance. Total assets equals total liabilities plus owner's equity. Okay, so we've created our 3 financial statements. We can give those to managers and they can start, discussing them and using them, making good decisions for the business. In the meantime, we made some adjustments to our accounts up here in our worksheet. But this worksheet is just a tool that accountants use to kind of gather all the information together and get account balances absolutely straight and correct for their financial statements. But these adjustments we need to record in our books. So adjustment A is a debit to supplies expense and a credit to supplies. So I'm going to go to my general journal here. I'm going to put the 31st. I'm going to debit supplies expense for $6,650, and I'm going to credit the supplies account for the same amount. So usually in the general journal you'll just make a little heading called adjusting entries and you'll put the adjustments in there. You don't even have to do a description because they're just adjusting entries. So the second adjusting entry, if I look back up to my worksheet, was a debit to advertising expense for $2,100 and a credit to prepaid advertising for $2,100. Okay, in the posting reference, I look up here and I guess I don't need to do it. Okay, let's keep going. On the 31st, our third adjustment was a debit to rent expense for $1,600 and a credit to prepaid rent for $1,600. And our last adjustment was a debit to depreciation expense for $180 and a credit to accumulated depreciation on the equipment for $180. Okay, so I've recorded my 4 adjusting entries in my general journal, and every time I put anything in my general journal I have to post each of those items into their respective general ledger accounts. And I'm just going to set up a few here. Supplies was account 121. In fact, I'll just pause it and get this caught up and be back in a second. Oh, I quickly set up each one of the general ledger accounts and gave it an account number. This was right out of the textbook on problem 5.4a. And I put them in order of account number. So we're ready to post the entries from our general journal into our general ledger. So I take the first line. On January 31st, I debited supplies expense for $6,650. And I'm on general journal page 3 here. So I go down to the supplies expense account and I put in the 31st. Now, when you do adjusting or closing entries we'll learn about the next chapter, we just do a little description. We usually say adjusting. In the posting reference column, I would put J3 from general journal page 3, and I'm going to debit that account $6,650. Because it had no beginning balance, I bring over the amount into the balance debit column. Okay. the balance column on these general ledger accounts, you keep a running total as you add entries. Now my last step is to take this account number 517 back up to my general journal and put the account number in the posting reference column to show where I posted that amount to. My next entry is a credit to supplies. So I go to the supplies account, which is right here. I put in the 31st, adjusting, J3, because it came from general journal page 3. I'm crediting the supplies account, $6,650, and I'm bringing over my running balance. Then I take account number 121 and put it in the posting reference column. All right, I'm ready to post to advertising expense, so I go down to advertising expense. On the 31st, adjusting, J3. I'm debiting advertising expense for $2,100, and I'm bringing the balance over $2,100 because it doesn't have a beginning balance or anything. And then I take account number 519 back to my journal and plug it in the posting reference column. So when I'm posting, I can always tell exactly which accounts have been posted or which transactions have been posted and to what account did I post them. All right, I'm ready to credit prepaid advertising. So I'm going to put in the 31st, adjusting, J3. I'm crediting prepaid advertising for $2,100, and I bring over my balance. Then I take account 130 back to the posting reference column to show that I've posted that amount to account 130. All right, and I could finish posting these, but we'll stop there. And that's pretty much what we learned in Chapter 5, how to complete a worksheet. Then we prepare our 3 financial statements. Then we record our adjusting entries in the general journal and post them to our general ledger. And those are the highlights out of Chapter 5.